Here's how you're going to actually manage risk in the stock market, okay? If I were to go back in the 4 years of me investing in the stock market and losing tens and thousands of dollars, I would be teaching my little self three simple risk management tools that I would pay tens and twenties of $1,000 to know these three simple risk management tools. And I'm going to teach you completely for free so you can finally learn how to invest and build your wealth without fear. Because the fact is, a lot of women have been taught to play it safe, while most men are been taught to like literally just take risk and figure it out as you go. We're going to change the narrative and I'm going to fucking teach you how to manage your risk so you can really just start buying stocks and start making money, because this is the goal. I'm going to teach you how to make a lot of money as a girl, be financially independent, buy whatever you want, travel the world, just do amazing things and not rely on a man. So let's get started. Okay. First things first, we need to talk about a few myths that you've been told. Myth number one is that the stock market is super high risk. False. Okay, you know what is more high risk? Dating in your 20s and being in a relationship of all in your 20s, in your peak, dating and sticking to one guy for his potential, investing all your time to cook for him, to clean for him, without him ever giving you a promise and putting a ring on your finger. And then 6, 7 years down the road, you're in your 30s, you want to get married, you want to get settled, and he breaks up with you for a younger girl who's in her just 21, 22, like being in college. And you're like, oh my God, I wasted all my 20s and my peak for this man. And guess what? You can never get back time. You can't be 20 again. You're not as hot as what you used to be. So dating is way higher risk, okay? Because I've been told the story so many times. We've heard all these stories about like women investing so much time in a man and then like the guy just breaks up with her. So like if you think about it, dating is actually higher risk than the stock market. Why? Because when you lose time, you can't get it back. Whereas when you lose money, you can always get it back. Money comes and goes, okay? I've made $140,000 in 1 month. I've also lost $100,000, like almost like $90,000 in 1 month as well, okay? That's business, that's life. Money comes in and out. The more you're detached from money, the more it comes to you, okay? That's the first thing. Now, investing is not gambling when you have a strategy and you use risk management tools, which I will explain in 5 minutes, okay? Stay with me here. You're not guessing, you're making informed decisions when you know exactly the type of risk management tools and you know you've done your research. These are actual real companies. The stock market follows real life companies. If you love Lululemon, invest in Lululemon because you're an actual customer. If you have an iPhone, invest in Apple, okay? Don't always spend $1,000 every single year buying a new phone. And when you're selling the iPhone, it just decreases in value. You lose money. Your money just goes into thin air, okay? Invest $100 every month into Apple shares, and in 10 years' time, you can probably already retire, basically. Okay. Myth number two is I don't have enough money to invest. I hear this with so many women that they think the stock market, you need like hundreds and thousands of dollars to invest. Actually, you just need like $50. You don't even need $50. You can even invest in Apple or Amazon, Microsoft, any stock you want for just $1 because you could buy fractional shares. So having a lot of money, that's not no longer an excuse. Okay. If you can save up for a Chanel handbag, then also save the same amount, if not double, in LVMH, which is a company that owns Louis Vuitton, Celine, like all these luxury handbags. It's LVMH. Invest in those shares because those grow in value, whereas most of these bags don't. Okay. And myth number three, you lose all your money if the stock market crashes. Definitely not as well, because you can put stop losses. What are stop losses? Let me explain. Let me show you three simple risk management tools that will minimize your losses to basically 0%. Yes. Over the course of these 4 years of investing in the stock market, having a CFA, helping over 200 women in my community, Luna, I've been able to help women make double-digit returns, literally making 10, 20, 30% per month of their money while basically losing 0%. If you don't if you think this is too good to be true, let me explain to you with real examples. So let's talk about tool number one, which is a stop loss. Basically, think of a stop loss like if you are planning to bungee jump off a building and you don't have the rope tied to your feet, but you want to just, you know, for fun, you want to just jump off a building because you're freaking psychopath and you're crazy. Well, imagine you have a nice safety net at the bottom of the building. So you know for sure if you jump off the building, you're not going to get hurt. This is basically what a stop loss is. So essentially, if you buy a stock at $100 and you don't want to lose more than $10, you don't want to lose more than 10% of your money, you could put an automatic setting called a stop loss. You could put a 10% stop loss so that if a stock goes down below $90, it automatically sells your shares. And that's it. So you can literally control how much money you lose, what you can mostly afford, what you can afford to lose. And that's what I always recommend my students in the beginning is if you're a beginner, complete beginner, and you're still a little bit scared to invest, just invest $100 and ask yourself, what can you afford to lose? If you can't afford to lose $1,000, don't invest, $1,000 and don't put a stop loss. You could put $1,000 in a stock. And if you say maximum, hey, I don't want to lose more than $500, put a 50% stop loss. You know what I mean? Obviously, you can put a smaller stop loss. But this protects your money. So let's use it as an example on the charts. Let's say you want to buy NVIDIA, okay? And the current price right now, as you can see in this chart, is $112. You have only $100 that you want to invest into the stock market, but you don't want to lose more than, I don't know, like $50 in this stock. Well, $50 of let's say roughly 100 is 50. So if the stock goes all the way down and crashes to $50, it will automatically sell. But hey, you don't even need to put it that low. You can literally put it here at the lowest part of the chart. If you go look through all the chart, the lowest it's really been in the last year has been like $104. And that leads me to the second risk management tool, okay, which is resistance and support levels. Okay, think of it like your support level is your comfort zone and your resistance level is kind of like the glass ceiling. Like, what is a limit that's preventing you to become your highest self, like the best version of you? Okay, you have your support, which is kind of your comfort zone, and then you have your limit. Okay, that's your resistance. So in the stock market, it's basically the same thing. When you zoom out, when I'm looking at the NVIDIA stock, I can see at least in this 2 weeks, there's been a limit, a ceiling of $120. So basically the stock is kind of struggling to go higher than 120 and its lowest is 105. Therefore, this is our resistance. And I'm going to draw a little line here so you can see. This is our resistance at 120. And this is our support at, let's say, or that is not a straight line. So basically it's 105. Okay, so basically now this comes to the point. If you ask me, but Celine, how what happens if I lose money into this stock? And this is where resistance and support levels are perfect for this, for you to manage your risk. Depends on where you buy the stock. This is my type strategy that I share with my students. If you already know for that time, let's say for this month, the highest is 120 and the lowest 105, where are you going to buy the stock? Obviously, you're not going to buy at its highest price at 122 because you're already at a limit. You want to wait for the stock price to go down until it reaches back down to the support. That is how you really minimize your risk, because statistically, at least from the charts, because this shows historical data, that if it goes below 105, typically, if it really goes below your comfort zone, basically, you're going to hit rock bottom, right? If the stock goes below 105, it's likely going to go lower. So what you could do is you wait for the stock price to go down to 105, you buy it at $105, and then you set a stop loss a little below that. Let's say you put the stop loss at 102, meaning if you buy it at 105, and there's two scenarios. If it continues going down, you have your beautiful stop loss, your beautiful net that's going to protect you from losing more money. It's going to go below 102. It automatically sells. And imagine you invest $105. You lose $3. Basically no risk, right? Now let's think of the optimistic scenario. Let's imagine that you bought at 105 and within a week, it goes up to 120. What is that? That's around 15% profit. So imagine you invest $1,000 into NVIDIA, you wait for the right opportunity to buy, and it shoots back up to the resistance. Now you make 15% profit of $1,000. You invested $1,000, you made 15% profit, giving you $150 profit. And this cycle, for example, would take a week to reach. So in a week, you can make $150 extra income, which you could use to buy a fancy dinner in Nobu or whatever it could be. And it gets more fun because when you start getting confident to the stock market, then you could put probably $5,000. And then 15% of $5,000 is around $750 in a week. You make $750 a week. If you do that every single week for 4 weeks, for a month, you basically replace your 9 to 5 job. So simple, right? And it's crazy because a lot of women don't even realize this. Like once you actually understand how to manage your risk and know how to read the charts, know the resistance and support levels, that's when you really start playing with money and playing with the numbers and seeing how much money you can make, because the stock market loves people with money. So the more money you have, the more profit you make, the more actual cash you make, because we don't really talk about how much money we talk about the profit. So the difference between the profit, the difference between what price you bought it versus the price you sell it is the gap, the profit, right? So if you make 15% and you invest $10,000, you make $1,500, right? With the 10,000. But if you invest only $10, well, you make $1.5. You don't make any money. So what I always recommend with my students is start little. So, you're not losing a lot of money, but as you get more confident, you can invest more money. And like with my portfolio right now, I have around $8,000. And I'm like totally fine putting 10,000 in a stock. And my stocks sometimes can make 20% in a day. Okay, so if that's something that you're curious to learn more about, I have a 15-minute free training link in the description below. It's a 15-minute free training on how I was able to make $5,000 in 5 minutes. Okay, it's crazy. It's actually crazy, but I actually have a recording of how I did that. So I'm going to put that in the link below. So that's your resistance and support level. Now let's talk about the last tool, which I also really, really love, that I've actually recently discovered like 6 months ago. It's the risk to reward ratio. So basically, when you have like hundreds of different stocks and you really don't know which one is the best one, I like to look at the risk to reward ratio because it's going to show me, based on the resistance and support levels, it's going to show me how much profit can I potentially make, but also how much risk am I going to take. And the bigger this number is, this fraction of the risk to reward ratio, the bigger that is, the more interesting it is for me to invest in that stock. Let me give you an example. Okay. Let's say, all right, let's remove this for a little second. Okay, we could keep that here. So, okay, let's use still NVIDIA as an example. let's do two scenarios, okay? Let's say you buy it at $105. So that's where it's like the most minimum risk, okay? You want to sell it at this price at 120, and you're going to put a stop loss here, okay? So what I'm doing right now is I'm basically showing here the potential upside and the potential loss I can make, okay? So I can make a 15% profit and potentially lose 3%. So if I divide 15 by 3, I get a risk to reward ratio of 4.46. Typically, anything over 2 is already considered a good trade. It's worth investing in if it's over 2. Now, let's use a different example, okay? Let's say you get late and you end up don't investing in NVIDIA this week, and because you didn't listen to my advice and you were skeptical and you're like, you know what, I'm going to wait a little bit. And NVIDIA ends up going all the way up now to 120, and you want to start getting in now. So you want to buy at 120. So obviously your stop loss is going to be at the support, right? It's going to be at 105. Now you have a potential of losing 13% instead of 3%. So you're going to potentially lose 13% of your money. And you want to say, okay, well, at least I think the stock will at least go up to now 140, which is going to give me 13% return. So it's more or less the same as before. You had the same profit potential, but this time the risk is way bigger because there's more downside. You're buying at a higher price. So what ends up happening? Your risk to reward ratio is 0.9, meaning you have a higher chance of losing money than actually making money. Okay, that's exactly what it shows. So that's it. That's the three main risk reward ratios. The risk management tools that you really need: stop loss, risk resistance and support, and sorry, my ADHD, I've stopped thinking. Sometimes I just stop thinking. I'm like a goldfish. But the third one is risk to reward. Okay, so you have these three risk management tools. They're so simple, they're so easy, and this is what all the day traders, professional day traders, they all use this. It's really this simple. So if you're curious and you really want to get in on investing, like, this is all you really need to get started. If you knew that you had control over how much money you can lose, what other excuse do you have to not start investing, right? So I hope you found this very useful. And once again, if you'd like to start investing, but you don't know how or where to start, basically, if you want to learn more about Luna, I'm going to put the link below in the YouTube description, because basically Luna is a 6-month investing program designed to help women who have never started investing or who have invested but don't really have a strategy. And we help you basically make up to double digit 20-30% monthly return if that's what you want. If you want to be more aggressive, you can, while minimizing your risk. And also, you don't have to be in front of the screen every day for like 5 hours. Literally all my students, with our specific Luna Abundance strategy, we do an aggressive growth strategy where basically, like, we have specific strategies where you buy at the dip. We tell you exactly when to buy, and you just need to spend 1 to 2 hours a week to find the right investments, which we will also give you ideas in our community. And you basically invest with us while knowing exactly how to read all these charts and just taking full control of your finances and your wealth. So if that's something that you're curious about, click the link below to learn more and watch the free training. And if you found this video super helpful, please like, share, and subscribe. But also, especially, comment below what would be another video that you would like to see more of. And if this type of format video is something that you like, that is like low edit, it's just very simple, let me know, because the more like feedback I get, the more motivated and encouraged I can be to make more videos and create more value for you guys. Okay. Love you, girls. I'll see you next time.